You know, the crypto world moves so fast, but every once in a while, a project just pops up that you absolutely cannot ignore. It just grabs everyone's attention. Traders, analysts, you name it. Today, we're going to unpack the story of one of those projects, a new token called Edge that has been putting up some truly staggering numbers. Let's dive in. And wow, do these numbers talk. I mean, right out of the gate, the Edge token skyrockets over 135%. In a market like this, a spike of that size doesn't just turn heads, it gets everybody talking. This is easily one of the most explosive launches we've seen in a while.
So you have to ask, right? Is this just another speculative pump and dump, or is there something real, something substantial going on here? That's the billion-dollar question. Because behind that crazy price chart, there's a whole story about a powerful business, a really controversial launch, and a massive test of trust. Let's start with the fundamentals.
To really get what's going on with the token, you first have to understand the business powering it. The project is called edgeX. And listen, this isn't just some white paper with a vague idea. It's a fully operational platform that's already doing some seriously impressive business.
So what is edgeX? At its core, it's a decentralized exchange, a DEX, but it specializes in something called perpetuals. Just think of them as futures contracts that never expire. Now, their big goal here is pretty ambitious. They want to give you all the freedom and security of a DEX, but make it feel as smooth and easy to use as a big centralized exchange like Binance or Coinbase.
And get this is no small-time operation. The platform is already handling around $2 billion in trading volume every single day. Let me be clear, that's not marketing fluff. That's a real, functioning business with massive, massive activity.
And all that trading volume? Well, it translates directly into real money. Based on the trading fees it's pulling in, edgeX is on pace to generate an annualized revenue of $184 million. So the key takeaway here is, this project has a powerful economic engine running under the hood. And this is where the Edge token itself comes into play. The platform has this really clever buyback and burn mechanism. Here's how it works. It's pretty simple. First, edgeX generates revenue from all those trading fees. Then it uses that money to go out and buy its own Edge tokens right off the open market. And finally, it permanently destroys or burns those tokens. This process constantly shrinks the total supply, which, in theory, is designed to create more value for everyone holding the token. A strong business, real revenue, a smart token design. It all sounds like a home run, right? Well, not so fast. The story took a very sharp turn right at the launch, which was, to put it mildly, messy. It raised some serious red flags that got the crypto community pretty fired up.
The trouble really kicked off with the initial airdrop and token allocation. Just look at this. A full 25% of the entire token supply was set aside for the team. Another 14% went to partners and liquidity providers. We're talking about a massive chunk of the supply concentrated in the hands of insiders from day one.
But it gets worse. When people started digging around on-chain, what did they find? They found that on top of the official allocations, a huge share of the supply was just sitting in wallets linked directly to the developers. For a project that's supposed to be all about decentralization, having that much power and wealth in the hands of a few, well, that's a gigantic red flag. So you can imagine the fallout was immediate. The community started asking some really tough questions about transparency, about fairness. For a brand new project trying to build a solid reputation, this was basically the ultimate test of trust. And how they chose to respond next was going to define their entire future.
Okay, so what happened next was just fascinating. As the XCheck's team scrambled into damage control, the market reacted in a way that I don't think anyone saw coming. It started sending some really mixed and frankly confusing signals.
To try and calm things down, the team took action and fast. They locked up 140 million of their own tokens. That's a full 14% of the total supply in a one-year contract, basically to prove they weren't about to dump on the market. They also fired up their buyback program way ahead of schedule and burned over $2 million worth of tokens to show they were serious.
And here is the absolutely wild part. While all this drama was going down, the Edge token didn't crash. In fact, it did the exact opposite. On one particular day, it leaps nearly 37%, all while Bitcoin and Ethereum were basically flat. This thing was trading in its own universe, completely detached from the rest of the market.
So, who on earth was buying? Well, when you look at the on-chain data, the trading volume compared to its market cap was just unusually high.
This wasn't your typical retail FOMO, small investors chasing a pump. No, analysts concluded this looked a lot more like disciplined programmatic buying, the kind you see from larger institutional players who are quietly accumulating a position.
All this buying pressure has now pushed the price into a really critical zone. So for all the traders watching, there are some very clear levels to keep an eye on. The ideal entry seems to be between 90 cents and $1. The key support, or your stop-loss level, is down at 84 cents. And if this momentum keeps up, the first target is $1.10, with the all-time high of $1.17 right behind it.
So this leaves us with two very, very different stories, doesn't it? On one side, you have this powerful revenue-generating business, and on the other, a really sketchy launch that damaged trust. Let's weigh the evidence and really break down the final bull versus bear case.
All right, the bull case is simple and it's powerful. EdgeX is a real business with huge volume and serious revenue. It's got that live buyback and burn mechanism actively supporting the token's price, and there's clear evidence that big money is buying in. But then you have the bear case, and you just can't ignore it. That launch controversy created a major trust problem. You've got a high concentration of tokens with insiders and a low circulating supply. Only about 35% is actually trading freely, which creates a huge risk of sell-offs down the line when more tokens get unlocked.
And that brings us to the final, critical question that the market is desperately trying to answer right now. Is this massive rally a real structural shift, a sign that the market believes in the strength of the business? Or is it just a temporary speculative spike driven by a low supply and a few big players? The data points in both directions, leaving the future of Edge, well, hanging right in the balance.